Hello, it's Darren from Investyourincome. Welcome to the channel. Looking at the pound dollar on the 1 minute charts just at the minute. I wanted to have a quick video today to talk about the realities of trading the 1 minute time frame. And I don't think there's many people covering this on YouTube, so I want to do it from a day trader like I am, and just give you the realities of trading the 1 minute chart. So it's the whole concept behind the 1 minute is that you can get in and out of trades within the day, obviously, and you can make a daily income as you would normally calculate when you're on a monthly salary. And the reason I go into trading in the first place is obviously to substitute your income for trading, and that leads you down this path into trading in shorter time frames. So you can equate quite easily, and you can see the money coming in on a regular basis. That's got great appeal to it. You're not holding positions and taking drawdown over a long period of time. But there are the realities of the situation that people don't understand when they get into this. And the intensity of the trading is far greater because I monitor 15 assets during the day. So you're looking at 15 separate charts, checking in with them very regularly. Seeing with any of the setups or what you like, and then once you're in a position, I'll then re-enter positions. So you need to monitor then several trades on possibly, depending on the day, numerous assets, and then re-enter on all those trades. It is extremely intensive. It is draining. It does drain your energy over time. And doing this, and I've had to evolve over time. I will trade the 1 minute still, and do still trade it daily. However, I trade it a lot less, and I once I'm in a position, I'll more or less just stick with that one position, or maybe a couple of assets if it's currencies and commodities, for example. But you just have to be honest with yourself about the reasons why you get into it. And for me, it was entirely based on a need for a new income, a new career. And that's why I got into it in the first place. And that was all the way back at the crash in 2008, 2009. And you learn the hard way. You know, it's a tough game trading in the first place, but the 1 minute just makes that even harder. So I would suggest if you're new to trading and you need an income, there are better ways to spend your time than trading with live funds on the 1 minute time frame. That's just being honest with you, because more than likely you're going to get it wrong, and you're going to get into positions you don't know how to get out of, and you're going to blow your money needlessly. When there's plenty of ways you could have scaled in or scaled out of those positions, or not got into them in the first place, as the case may have been. So you need to be, just realistic about it. If it's a career for you, then it is possible to trade the 1 minute time frame. But we have oversold areas, and we have long averages as our baselines. They give you an indication. It's not just green below the red is a sell trade there, and green above is buy, but it gives you a good indication of where the long-term trends are going and when not to be entering trades. For example, here when you're oversold and it spikes up, I would not be taking a trade there. When it pulls back to the averages, it's now reverted to the mean, so I'll be more interested in entering a position there. And this move just extends down further, and you can exit position down there. However, if you do get into trades like this, even when it's oversold, there are ways you can scale out of it, but you will take a drawdown in this time, and you'll be getting out for a break even at the end of it. So you can see the two positions I took here on the pound dollar, and these are very simple trades really. It's just pull back below the averages, slightly oversold here, just really went with the long-term trend, but it's more in a trading range at that stage. But I just went with the lines there and took those simple trades, and came out at the overbought areas. So that is, that's a simple way of trading that I do, but I'll wait until I get those situations where I'm comfortable in, and I know how to get out of them. That's really the core. It's knowing what to scale into and what just to dump. You have to just sometimes get rid of a trade, take a loss, but I won't have to stop. My stop loss are extremely wide, my stop losses, so I just close those positions when I don't like them, if not performing the way I want them to. Coming up to the highs here, and we're coming into overbought territory. I'm out on those levels. It went higher, and it's since come down because it's overbought. But I don't need that. I don't need that full movement. So this was a position taken last night, and I closed it first thing this morning. So you don't need to worry about those. You can see, obviously, in long trends like this, we had a reversal here, a crossing, and you'll get another situation up here where we reversed. So we're overbought. It's come down to the baselines. You could have entered positions here quite comfortably. This would be happy positions for me to enter. You come out when it comes back to the baselines, but these are pinching together. And as my members will know in my group, if I get to this situation over here, we're still oversold, but these are pinching together, then I'm out of that position. One of these is our baseline. I have actually added just one more line onto there, so I'll be going through that in a new video on the group anyway. So yeah, I just want to cover it today. The reality of the 1 minute is you have to make a lot of decisions each day. Okay, and when we're talking about trading to get more freedom in our lives, when you are trading the 1 minute, you don't have that freedom because you can see a position here I've taken. It's overstretched and oversold position. I would have entered more trades up there, and it's come back anyway for profit. However, you can see. I'm going to be in drawdown. I'm in drawdown all this time, and just based on this one indicator, it's a bullish trend at that stage. But I know from experience that we're in a long period of overbought area. It can carry on going up, in which case you just have to close those out. But I scale into those positions and I get out of them. This will be out for break even, and these will be in for profit. So it's just that I mark these when I take my first position, and I add on to them if I remember. But here we go. So you've got to understand it's not just on this overbought, it's on the market structure and also on these averages as well. So it's not a simple process. It is not easy, and there's plenty of room for mistakes. You can see the opportunities we get though when we are overbought, and it consolidates back down, comes oversold. It's below the halfway line on the oscillator. We can enter positions then again and take that move back up to the overbought positions again. It's not perfect though, and I want to try and show you this is a good situation, I think. So here we go, a bullish trend that's rolled over. It's very flat. You can see the averages are flat and they're pinching together. So as you know, I'd be out if I'm still in any positions down here, especially here. Overbought on the oscillator down the bottom, and these are pinching. I'll be out. So if you entered a short trade at that position, you could get into there. This goes oversold, so I'll be out again, even though these are crossing over. So if it pulls back here, I'll be entering a position there. This is pulled back, not perfectly, but you could take a position there and take it down. Now you get down here, these aren't really doing much. Price is flat. It's at a level at the bottom. When this spikes back here, it looks like another entry. So if I'm not out of that position, I'm still in a trading position at that stage. I'd have to re-enter those up here, and when it spikes down back to this baseline, I'm out. So my entry down here would be a loss. This will be a break even, and you have two profits most likely in this spike up here. So maybe it's a tiny bit of profit out of that move, but that just hasn't performed the way I wanted it to. On the second spike up here, we got a divergence in the oscillator, and you've got a higher high up here, and these are bearish. I'll take a short move down there, just onto the oscillator down the bottom there, just to take a bit of profit. So in that day there, we can look at, you'll be taking maybe a slight bit of profit out of that day, but that's a good day. These pinch together again, and we go back the opposite direction. We're getting some trades again. So the structure is very good. You have got reasons to get in and out of trades, but you need that experience in the markets to be able to see that sometimes. Perfect trade here. Just want to show you some more imperfects. Same situation here again. You can see the pinch in the averages at the bottom here. I'm running out of back test data here. We were oversold. We consolidated back. See, there's a pinching together. So if I took a short here, it's overbought. Took a short position here and down to there, I'm going to be out of that position. These are pinching together. I don't like the look of that. Again, if I hold it, I could scale in, get out for a bit more profit down there. But you're talking about holding overnight, and these are pinching right together. But you can see the move happened there, but it was already overbought on the oscillator, consolidated, went up again. So you see why you have to jump in and out, and whilst you have to add positions and monitor those positions. Now, if you're trading numerous pairs, which I've been doing for years, it is extremely tiring. So I've extended my time frames out. I'll go through that in a few videos. Also back into my stock trades, adding stock positions on as well, which I'm going to go through a few stock reviews and things like that. If people are interested, hope you got something from the video and enjoyed it. Please subscribe to the channel and like if you liked it, and I will talk to you soon.